Three important identities in the stock market. First, you have the market makers, right? Then you have the investors, and then you have the traders. The market makers create a bid price and an ask price. They are the middleman between two people who want to buy the stock, right? There's a bid price and then there's the ask price, right? There's a price where, people are going to bid for, and then there's a price that they are the middleman. They are the person who has this stock in between the person who wants to buy the stock and the person who wants to sell the stock. He gets paid from the spread. I have an example right here. Let's look at an example, right? Let's say a market maker is handling shares of XYZ company, right? Whatever company that is. He has a bid price of $49.95. He has an ask price of $50.05, right? The spread out of that is 10 cents because that is the difference between the bid and the ask price. So he gets paid out of that. A retail buyer wants to buy $100 shares of XYZ at the price of $50.55. The market maker sells these 100 shares to the buyer at $50.05, receiving $5,005 because he's selling 100 shares. So that is the market maker, right? The market maker is truly the person that is the middleman between two people who want to buy the stock and sell the stock, right? The investor, these are the people who are creating your 401k, you're managing your portfolio, the big corporation investing big money, right? So like Infidelity or like hedge funds, we call them institutional investors, right? So we are retail investors, but a big corporation they're called institutional investors. But they are the people who are creating your 401k. They're managing your money at work, or they're investing big money for people, for the richest people in the world, right? They're taking a lot of money and they're investing into the market. They're no longer doing this on a retail stance. They're actually an institution, and this is a business that makes profit from investing other people's money, right? And then you have traders, right? The traders are not looking to hold anything for a long time, right? They are looking for momentum in either direction. It is possible for an investor to be a trader, right? So traders are looking to get in and out, right? So an investor is looking to get in and hold for a significant period of time and get his profits that way. But a trader, you'll probably hear the term day trader, right? If you're not new to investing, you probably heard the term day trader. A day trader is somebody who buys contracts in the same day and sells them in that same day, or buys shares in that same day and sells them in the same day for profit or a loss, right? Because they're trading. So all they're doing is trading one contract for another. They're trading one share for another share at a higher price, right? Or one share or another at a lower price, whatever it is, or one contract, whatever it is at a lower. They're trading. They're not looking for they're not looking to actually hold this long term. They're actually looking to hold this until it goes in the direction that they want it to go, whether that is up or down, right? So that is a trader, right? So those are the three identities in the stock market, the most important identities in the stock market. This helps you get a good understanding of what goes on behind the scenes, because all the things that are happening on the number, like everything that you see in the numbers, there's something that's going on behind that scene, right? So if you saw, if you see 220 go from 220 to 215, that truly means that plenty of people in that space sold their shares or sold their contracts to make this price go down, right? And if you see it go vice versa, 220 to 225, that truly means a lot of people came in and bought so many shares and so many contracts to drive this price up, right? So there's always something going on behind the scenes. The stock market isn't just numbers. It's actually people behind these screens and behind these numbers, making these numbers do certain specific things. So that's why these identities are important. So understand these identities, the market makers, the investors, and then the traders. There's no investor and trader without a market maker, because there's nothing to invest in, there's nothing to trade without having something to buy or sell, right? The market maker is the one who's keeping everything together, right? I have this thing, an investor wants to come buy it, a trader wants to come buy it. This is my price for you to get it. In the last few topics, but now we're gonna truly. All right, how does a company get onto the stock market, right? So we already discussed what a publicly traded company and what a privately traded company is and how they have to get on the stock market. So we discussed it briefly. We're going to hop into it now, right? So IPO, what is an IPO? IPO stands for initial public offering. And an IPO is when a company is listed on the market for the first time. It's when a private company decides to go public. When they go public, they are agreeing to disclose their information and their financial details and all important information about the company. In exchange, they get more people to invest into their company so they can continue to scale their company and make their company even bigger, right? So that's what an IPO is. That's how a company gets onto the stock market and says that this is what we're going to do, all right?